Welcome back, investors, to Ticker Time News. I am Adam, and we are here to talk about the markets today. What happened? Why was there a rebound? Well, it was a really quite simple answer to that question. Why did stocks rebound? Because the market was wildly oversold, like really big time oversold. And that helped to give a little bounce in the step of the markets today, if you will. So that's basically, in a nutshell, what happened. Really oversold and a bounce from that. What happens next? Well, that's anyone's guess, but there's a couple cool things that happened on the chart here that I'm going to point out to what may happen next. So look forward to that. But remember, the most important thing, the reason why we do a live stream is to be with you one-on-one, answering your questions. You are the most important person to us, and we want to make sure to get your questions answered. So leave the ticker symbol and your question in the comments. We'll go over it live during the show, or maybe we'll just create a whole separate vehicle. There's always one word I mess up on when I'm doing a live stream. It always happens. Okay, anyways, we may make a separate video to go into greater detail about the company if we see that it's a company that needs some research, or maybe earnings are coming up in a day or two. But we can do that too. So we have a few that we're working on. Mosaic is one. I've really been trying to wait for those earnings to come out for that video, because it'll give a lot of insight into the company. So yeah, just remember that you are the most important person watching this video right now, and I greatly appreciate it. All right, the S&P 500 advanced 0.6% on Monday after being down as much as 1.7% earlier in the day. Now, just real quick, this is the S&P 500 on the chart here in front of you. It's a daily view. I'm going to go to a 5-minute view, and you can see this a little bit better. So here we are for the day. We come in, we're down, we dropped on Friday greatly. We have dropped down in the early session before market open, and then the market opens, and it doesn't really drop too much here at the very beginning. We get a little rally, then it drops, and it drops all the way down to a very important line, and that line is 4,200. It's an area of support. It has been support in the past recently, and that's where the S&P 500 bounced off of, 4,200. And then it rallied pretty much the rest of the day. Now, it's getting really, really close to that 4,300 line, which could provide a little bit of pump the brakes here, resistance, as a possibility, especially when you look at the ending of the day, rallying from that point of 4,200, and then we end up flat for the last 15 minutes. And then after hours, the 5 minutes after market close, flat, right? We've got a big red candle here for volume. We always get big volume at the end of the day. It happens every single day. And it was a red candle, but barely budged, barely moved. And that's what we could be setting up for tomorrow. We could also be setting up for a continuation of maybe going from 4,300 points to maybe 4,400 points. That's a possibility, something to keep in the back of your mind there, because we did go from 4,200 even nearly up to 4,300 even on the stock chart, just less than 4 points away from that. So just keep that in mind. All right, going to go back to the day chart here, and I'm going to pull up the Nasdaq, because the Nasdaq was the real winner today. There we go. Nasdaq was the big winner today. It was up 1.3%, outperformed 1.3%. It outperformed all the other indices. Nice big move. And you can see the support here for Nasdaq is really at this 1370, 1360 area on the chart. We didn't get that low for the Nasdaq, even though the market was completely oversold for the past 3 sessions, the past 2 sessions, really big. But today, we didn't get to those lows, and I don't think these lows that we saw here on March the 14th, or again with that big monster rally on February the 24th, are out of the picture. Now, I do think this rebound rally that we had today, I do think it could continue tomorrow outside of any major headline news, because this market is so jittery. Any crazy headline news would send the market backwards. So I think the Nasdaq could get up here to the 13,900 area. That's doable. Maybe it takes a couple of days to get there. And I do believe we could see a rally on Tuesday. We could see a continued rally on Wednesday. But then the end of the week, that could be the reversal back down again. I don't think this rally that we had today, maybe going into tomorrow or even Wednesday, is going to be a long one. This is going to be a short-lived rally bouncing off of a market that was totally oversold. So that's their short-term prediction. Now, if we look at the Dow Jones, and then I'll pull up the Russell 2000 here right quick. The Dow Jones, it is off its session lows from today. I mean, it got down to 33,323. And then here we go to close at 34,049. Pretty good move for the day. But it's at resistance right here, which could be a little bit of a problem. But then again, if we can get enough momentum, because this market, again, was totally oversold, if we could get enough momentum on Tuesday, maybe even into Wednesday could slow down. Maybe we could fill in this area that we lost last Friday and last Thursday in the market, and maybe get to an area of around 35,000 for the Dow Jones. That's possible. And again, this is just a short-term rally. It could last 2 days. It could last 3 days. But I really do believe that could be it. And then if we go to the Russell 2000, the Dow Jones and both the Russell 2000 rose 0.7% today. All the indices, they followed the same pattern, sold off, oversold completely, slowed in the morning, maybe dipped some in the morning, and then rebounded throughout the rest of the day. And you can see that here for the Russell too. It was down to a low of 1908, and then we closed at 1954. So a nice rally. We got above this support area here. I'm glad we did. It's something we closed on last Friday. So I'm glad we were able to close above that today. That gives the Russell 2000 a little bit of breathing room and a little bit of support to stand on to maybe, get up to the 50-day moving average, right? Throughout Tuesday and then Wednesday. But then again, the market is crazy. It can do what it wants sometimes. So just keep your eyes out for that. But I do think we could get a short-term rally because, again, this market was so oversold. Now, with the tech-sensitive Nasdaq, like I mentioned already, it was the best performer out of the indices so far. I'm bullish on Microsoft and Google earnings. What are your thoughts? I am too. I think Google is going to do really well. I do think, though, with Google, oh, I got to be careful. All my devices are now going off because I said it. With Alphabet, how about that one? With Alphabet, the one thing to watch out for is ad revenue. Of course, it's their biggest source of revenue. But what are companies doing with this high inflation and a slowing down, maybe a little bit of the products, maybe a little easing of supply chains? Are they putting the ads on, you know who, Alphabet? That's the one thing I'd watch for. Was there a slowdown in ads? That would be my biggest thing for Alphabet. For Microsoft, again, I think both of those companies are good long-term to hold. I think both of those companies' earnings should be pretty decent. We're coming off the first 3 months of the year. Things have been going down in the stock market, but business has been booming. Consumers have been spending, and that can be a big deal for companies spending on advertising, for companies spending on data storage, Microsoft, for all of the consumer data that a company has. So I think both of them are set up pretty good. Let me just pull them up here on the chart right quick. So first we'll look at Alphabet, and you can see Alphabet, it fell down below this strong support line that it had here, right around $2,500 a share. There were lots of reactions for that. I believe this pullback was a great buying opportunity. This morning when it dipped a little bit more, and on the 5-minute chart here for Google, you can see this morning that little bit of dip, that was your time to buy first thing in the morning for Alphabet. And again, I think that was great. Now, earnings coming up, you can see they have an estimated EPS of $25.59 a share on revenue of $68 billion. I think they'll beat top and bottom lines, but I do want to watch for that advertising number. I want to know what's happening there. The rebound here for them, it could definitely shoot back over that 2,500 mark per share. And then it's kind of got this area where it's been range bound, going back here on the chart to January the 6th, where it's just been bouncing around in this area. Now, last earnings, it had a humongous gap up. And let me measure that just to refresh my own memory. We went from about here to about here, almost a 10% gain there off of earnings. We could see an explosion like that for earnings for Alphabet coming up in one day. So definitely keep that on your calendar. Well, we got April 26th, so tomorrow. All right. So looking good. With it being oversold like this too, this presents a second awesome possibility for good earnings, for greater explosive growth off of earnings, just like we had last earnings here. But, you know, with this thing being so oversold like that, I mean, RSI, even with its 3% gain today, relative strength index is at a 31.3. That is low. Money flows are at a 22. Both of those are low. Both of those are oversold. I mean, we had a buy signal flash for Google on Friday at the close. So this is looking really good. And if we go look at Microsoft, right? Almost the same thing. I would bet more on Google than I would on Microsoft here, because Microsoft will have some inflationary concerns with them, and Microsoft has the activation deal, so they're spending their money. One thing with Alphabet that might be interesting too is what acquisitions are they shooting for? They've got money in the bank. They could be making some acquisitions on some companies that their valuations have been brought down. So that's something else I'd be listening for on Alphabet. Here with Microsoft, we got an EPS of $2.19 a share on $49 billion. I see no problem with them breaking the top and bottom lines on that one. I don't think we could get a big rally or a big gap up like we could with Alphabet with Microsoft. It's at 280. This thing could go to 300 very easily on really positive earnings. But also remember, on earnings day, you know, part of earnings is what have they done, you know, EPS and revenue. But the other part that's equally important is what's happening in the future. What is their guidance? So make sure you're listening for guidance as well, because that's key to whether any type of gap up rally can continue. All right. Moving off of those two, thank you for your questions. I greatly appreciate them. If you have more, feel free to leave them in the comments. That's what I'm here for. All right, 7 of the S&P 500. Let me just pull that up right quick. 7 of the 11 S&P 500 sectors did close higher today, after, of course, each traded lower during this morning's session. Information technology was up 1.4%. Communication services was also up 1.5%. Those were this month's worst performing sectors. So it's great to see that they outperformed today. While energy, it was down 3.3%, by far the worst performer on the day. Now, there wasn't a specific catalyst that drove the markets off their session lows today, suggesting that maybe the market simply bounced from a short-term oversold condition. That's what I wholeheartedly believe what happened in the markets today. It was just flat, too much. It was oversold. It was down too far. Many people had to take advantage of that. That was aided, of course, by short covering activity. That helped to push the markets up too. Now, the S&P 500 was down 6.9% between last Thursday intraday, and that high was 45.13, and today's intraday low at 4,200. That's a big drop in 2 sessions. So the downside momentum corresponded with underlying growth concerns, specifically tied to the Fed's hawkish mindset, China's zero tolerance policy for a worsening COVID-19 situation. I hope they keep it under control and under the lid over there. And of course, Russia's invasion of Ukraine. That has shifted towards a land grab strategy in eastern Ukraine. So keep them in your prayers and thoughts. All right, despite the comeback, growth concerns were still evident by an 8 basis point decline in the 10-year yield to 2.83%. Now, again, we can do all of this together, all of the charting. There is a link in the description to a free account to TradingView. If you're not using TradingView yet, I highly suggest it. It's where all of my trading and charting is done. Now, for the 10-year, we do US10Y. That's how we get to the 10-year yield, and you can see it here. It's right now sitting at a 2.818, and it closed at a 2.83, so it's gone down a little bit further. There was also the 3.3% decline in oil prices to $98.63 a barrel. And of course, the underperformance of the value cyclical stocks and the relative strength of growth stocks. They were all playing on growth stocks today. Now, mega caps, being some of the more beaten up stocks this month, led the recovery effort in front of their earnings report this week, like we talked about with Alphabet and Microsoft. Both of those I have high expectations for. Now, the Vanguard Mega Cap Growth ETF, that ticker symbol is MGK. We use this one a lot to track how the mega cap growth stocks are doing. And you can see this nice 1.25% rally here. You could round it up to say 1.3% if you wanted to. Now, to compare this, to see whether this was really good today or not, we use the S&P 500 equal weight ETF. It's an Invesco product. The ticker symbol is RSP. This will let us know whether mega caps did good or not. And look at that. This increased just 0.3%. So the mega cap growth did a lot better today than your typical value stocks, right? Or the equal weight. All the stocks in the S&P 500 with equal weight, equal percentage, only 0.3%. Yeah, mega caps did real good today. Okay, in corporate news, everyone is talking about it, and that is Elon Musk's takeover of Twitter. Ticker symbol TWTR. And I have a video coming out this evening about Twitter and what the whole deal is with Elon Musk buying it. So be on the lookout for that video. Again, it comes out later this evening. I got a couple things to say in there about this deal and what's going on. But Twitter, they did confirm that a definitive agreement to be acquired by an entity wholly owned by Elon Musk for approximately $44 billion, or the $54.20 per share. And all cash, right? So if you are a shareholder in Twitter, you're not going to be able to keep your share, right? You're going to have to forego your share in exchange for $54.20 per share that you own, okay? Once the deal has been finalized and complete, meaning it's passed the SEC, it's got shareholder approval, and the deal goes through. Once the deal is done, that's when Twitter will no longer be a publicly traded company. It will be a private company. It will not be on any stock exchange. TWTR will not be a ticker symbol for Twitter anymore. It will be a private company wholly owned by Elon Musk. Now, once the deal is closed, like I said, everybody who owns shares, you will get $54.20 per share that you own, and it will just be deposited into your brokerage account. Like a trade, you're giving up your shares for this amount of money. So if you were one who bought Twitter shares when they were down here at a low of $31.30 on February the 24th, congratulations, you got yourself a great deal there. And I think overall, it's a good deal for Twitter, right? Twitter has been in the headlines for, I think, all the wrong reasons lately. And to get the company private, the goals that Elon Musk has for the company to make it better, features better, to make it open source, to build more trust with everyone. He's got some good ideas for it, and I'm definitely going to be curious to see how it works out. And I know that Tesla took a quick dip today when the news came out. TSLA is the ticker symbol. It took a quick dip today when the news came out about it. Let me go to the 5-minute chart here. It was down 0.7% on the day, and you can see right here, when it was tapping $1,000 a share, it ran up in the morning, broke $1,000 a share, and then kind of traded sideways, and then got back above $1,000 a share. Then it went for a big 15-minute drop, right? Where it got down to, it looks like, a low of $979.20 a share. And then, of course, snap back right from that low there. But this is when the news came out that the deal is going through. So there's going to be some backlash from Tesla shareholders, and it's all going to be about, well, is Elon Musk capable of splitting his time, focusing on Tesla, because Tesla is going to have a rough Q2, and they're going to need all the help that they can get to get through Q2. Elon Musk said this on the earnings call, but he also said on the earnings call that Q3 and Q4 will be bangers of a quarter, 2 quarters for Tesla. So second quarter is going to be challenging. So some shareholders are going to think, well, Elon, maybe you need to put some time over here on Tesla and not this Twitter side thing you got going on. But my whole thing is, Elon Musk is the CEO of several companies, right? I mean, Tesla and SpaceX, right? 2 companies worth $1 trillion. I imagine SpaceX is worth $1 trillion. It's a private company, so we don't exactly know. But if he can manage an electric automobile company that has full self-driving, that has autonomy, that has robotics, that has insurance, robo-taxis, and all these other aspects to Tesla, which in all reality, Tesla is just kind of like a holding company for all these other things that Tesla does. Energy is a big part of it. If he can manage that, then he most certainly, I believe, I mean, there's an argument to be made for that out of every CEO out there, Elon Musk is the one capable of managing another company without putting pressure on any other of the companies, right? Neglecting any of the other companies. So I think it'll be okay. But you can see that drop when the news came out. So you'll probably hear headlines in the coming days about, well, is Elon Musk going to be stretched with time and be able to manage all of these things? It's just FUD, in my opinion. I think he'll do just fine. All right. Another company that I wanted to bring up right quick was Coca-Cola. Ticker symbol is KO. I'm working on the video on Coca-Cola about their earnings that came out. Man, did they do a fantastic job with earnings. Just fantastic. Coca-Cola, they were up, call it 1% today. They set up their own KO knockout, beating top and bottom line estimates. And of course, beautifully done. Beautifully done. So I'm working on a video on Coca-Cola. Again, a great job. They beat the inflationary pressures really, really well. Let's go back to the day chart here. I mean, so well, right, that today Coca-Cola was able to knock out a new all-time high. They set a new 52-week high, all-time high, $67.20. And it did pull back a little bit. It closed at $65.94. But earnings were awesome. Really, really good. Now, investors did not receive any economic data on Monday today. But looking ahead to Tuesday, it's a big day. Investors will get the Conference Board's Consumer Confidence Index for April, new home sales for March, durable goods orders for March, and the FHFA Housing Price Index for February, and then of course the big one, the S&P Case-Shiller Home Price Index for February. Are we going to start to see a crack in the foundation of the housing market? So the housing market is going to be, it's definitely going to be in the spotlight tomorrow with these different reports. So we'll keep an eye out for that for tomorrow. But my big thing I'm looking for, I'm starting to sense and feel that the foundation of the housing market is going to start showing signs of cracking. That doesn't mean prices are going to come down because interest rates are going up. But with interest rates going up, that's pricing people out of the market. That's making home ownership less affordable. And affordability is one of the big things with home ownership and being able to buy a home, especially for first-time home buyers. So, yeah, we'll be keeping our eye out for the housing market tomorrow with all the data coming out. Do you think that the housing market is going to start to show cracks in this foundation? Do you think the housing market, the bubble has just blown up and it's up there and it can't really hold much air and it's going to start to deflate a little bit? Let me know in the comments below what you think about the housing market. So yeah, all right, that's everything that I wanted to cover today. Thank you so very much for being here with me. I greatly appreciate it. Remember, I am here live every day. The market is open after the closing bell, and this is for you. So remember, if you have a question, leave the ticker symbol in your question in the comments. We'll go over it during the show, or we can make a separate video about it or talk about it during our next live stream. So always feel free to ask questions. That's why we're here. And if I don't know an answer, then the best thing that I can do is tell you I don't know, and then research it and get an answer for you. All right, ladies and gentlemen, thank you for joining me today. I greatly appreciate it. If you could, though, help us out by smashing that like button. That helps out tremendously. Also, take the URL, share it wherever you can, because that helps too. And then the third thing, click the first link in the description to beat the market with us. I would love to see you there. And of course, there's some other goodies in the description area that you should probably check out too. All of them pretty cool offers from some of our sponsors there. So I greatly appreciate your time. I hope I made this quick enough and thorough enough for what happened in today. Remember, it was oversold. The markets were oversold, and that's the big reason why. And if we go back to the S&P 500 chart here for tomorrow, I think we could have a short-lived bounce. And for the S&P, I would be shooting for this yellow box right here, which would be somewhere around, maybe we can go from the 4,300 to 4,400 on the S&P 500. Get another 100-point gain in there for Tuesday. That would be pretty good. That would be pretty good. But I do think this is a short-term bounce because the market was totally oversold. So just keep that in mind. I wouldn't go long right here, too terribly long in the market, because I do think there's more volatility to come. But remember, when the markets do get oversold, you typically find a bounce somewhere in there, right? All right. Thank you, ladies and gentlemen. I will see you all in the next video. Thank you. Good night.